Okay, so I'm going to be filming a live stream show late tonight because the rest of the week and the weekend I don't want to be doing too much work, and I'm also over the weekend going to be at LibertyCon. So if you are already planning on going to LibertyCon or you can make it there, send me a tweet or send me an email, and maybe we can meet up for a beer or lunch or dinner or something. If there's enough of us there who want to meet up, maybe I'll organize something more than just impromptu. There's also happy hours at LibertyCon. Okay, well, let's get into the macroeconomic part of the show. So I'm just going to let's do a short summary of all the global macro events that are happening lately. Okay, so the economic data that is coming out in the European Union and in China is showing that both major economic areas are getting worse. And this basically confirms the guidance and the data that we had coming out from both FedEx and Apple. Okay? Because Apple said China was bad and FedEx was warning us about Europe as well. So we have clear indications that the global economy is getting worse, especially in Europe, and China is slowing down. On top of this, you have the European Central Bank. Their balance sheet has still kept increasing with reinvestment, but they are talking about drastically reducing their balance sheet soon. And, that would be bad timing because, look, their economy is slowing, the European Union economy is slowing down, their exports are slowing down to China and elsewhere. On top of this, the European Central Bank wants to drastically reduce their QE program. So really, really bad timing from the ECB. And basically, they're going to be calling up the Fed, right? The Federal Reserve with the currency swap lines then. Because as we see on the internet, because they're keeping this out of the mainstream media news here in the US of all the problems and riots and stuff like that going down in France. I think the reason it is being kept out of the mainstream news here in the US so much is because the French government called and asked, and they want Americans who are naive and have money to go to France still, go to Paris, go to the wineries in the spring and the summer in France and go and spend money. So I think, they're worried if they show enough of the rioting here in the US of what's going on that it will really hurt tourism. But back to the rest of the global macroeconomic situation. So the People's Bank of China this month has injected $83 billion in open market operations, the largest on record. So if things were going really, really well in China, you probably would not be seeing stuff like this happen. $83 billion. That's from a reporter, an American reporter who covers Asia. So she reported that yesterday. On top of this, and this is what worries me, this story literally just broke in the last couple hours. We have now, it just came out, the U.S. is pursuing criminal charges against Huawei for alleged theft of trade secrets, according to the Wall Street Journal. So the trade secrets case involves a robotics product meant to test smartphone technology owned by T-Mobile, according to the Wall Street Journal. An indictment is expected soon against Huawei's CFO. Wow. So that type of news, guys, is definitely, 100% definitely not going to help the U.S. and China trade negotiations. That type of news is not going to help the trade war. It will probably escalate things. I mean, normally like kidnapping or a hostage situation, which is kind of like what this is not really going to help things. So on top of this, with the global macroeconomic situation, with worsening data coming out of the European Union and China, you have Russia, which is de-dollarizing. They're diversifying their reserves, their trade surplus and reserves into, RMB. They even announced recently, Putin said that they're probably going to put, I think, $10 billion into Bitcoin. So we'll see if they actually do it. I don't know what proof we'll have that they do it, but they said they're going to do it. And I believe Putin may have just given a speech this week and actually talked about Bitcoin and how encouraging some Russian citizens to buy Bitcoin as well. Also, there was an interesting piece that came out in the last couple weeks from Ambrose Pritchard Evans, and he talked about how the European Union needs to be dissolved. On top of this, you have the stuff with Brexit, which basically, the globalists, the champagne socialists that are running the UK government they've been dragging their feet, they've been using lawyers, they don't really want a Brexit. So we'll see. All this is a powder keg, as I've been saying for a while in the European Union. Yes, the US has immense problems. Yes, China has problems, but things on a relative basis appear to be far worse right now in the European Union. And on top of this, the other story I wanted to bring up was Janet Yellen says it's very possible the Fed has made its last rate hike of this cycle. So Janet Yellen went from only about, 6 months ago when she was still at the Fed before Donald Trump hired Powell. When was it 6 months ago? Man, it might have been a year ago. I don't know. It's time is flying. But Janet Yellen said there would not be a financial crisis in her lifetime. And in a year or less later, she's now saying that the Fed is done hiking rates. And this is after what Powell went on stage in the last week or two with Yellen and Bernanke. So a lot of crazy stuff, guys. All these crazy global macroeconomic events. I mean, I could spend 10, 20, 30 minutes reading off the crazy headlines. Oh, one more. So Goldman Sachs, and I don't know if we can trust them on this because maybe sometimes they actually do good research and put out good information to the public, but Goldman Sachs is warning that earnings growth in 2019 from corporations could collapse by 85%. So that is another warning sign there, that in spite of all these share buybacks, and I believe there's been about $1 trillion in share buybacks in the last 12 to 18 months, that in spite of the share buybacks, the earnings growth is starting to rapidly slow down. And that tells me that the global economy is starting to really, really slow down. Okay, well, the main reason for doing the show, besides, maybe if you guys like it, maybe at the beginning of the show before we do a topic that's more concentrated, maybe we should do a global macro summary of some of the current events at the beginning of the show, or I can weave it in. I don't really care. I think it works both ways, but if you have a preference, put it in the comment section after the show is over. But the main reason I wanted to do this live stream show was that this week it was announced that Newmont Mining is buying Goldcorp. So this is a merger of about 2 out of the 4 or 5 largest primary gold miners in the world. If you remember, in September, Barrick Gold bought out Randgold Resources, and then the CEO of Randgold, who's considered one of the best CEOs of the industry, he promised all these spending cuts and all these slashes in selling, general, and administrative expenses. And so far, he's actually lived up to his word, because the new CEO at Barrick of the combined company, I believe he sold the headquarters in Toronto and he's slashing expenses like crazy. And so the CEO, the merger, first of all, I think this is probably bad for Newmont Mining shareholders, this deal. I think it's probably good for Goldcorp shareholders as kind of a bailout, because if you pay attention to Goldcorp, they've been having a lot of production problems lowering their costs, problems maintaining revenues, problems at mines, those types of things, a lot of different problems at Goldcorp. And so the CEO at Newmont, it's a $10 billion purchase, and he said that we're designing our business to survive through the cycles in prices. We're not predicting an up or down in gold price, end quote. And so basically, they're trying to do what Rick Rule has been advising the gold mining industry, the producers, to do for many, many years. And that is to merge and drastically start cutting the costs that can be left to cut. So I have a research report. It's for free. It was posted on the aureport.com. That's the Gold Report. It's a free newsletter, and it's from a CIBC investment banking analyst that was covering both Newmont Mining and Goldcorp. And she just downgraded the stock for Newmont Mining. She downgraded it pretty heavily. And I don't know if I should read the whole report, but I'll attach a link to it if you want to read it yourself. So I think there's really good analysis in here. But basically, she said that Newmont is taking on a lot of risk by acquiring Goldcorp, and that they have a lot of work to do. So they have to optimize all those mines. Goldcorp was in major trouble. They needed a capital raise. They were having big problems cutting costs at their mines. The mines were not running on time and on budget and having the margins that were projected. And this is a problem that plagues the whole mining industry in general. In general, most people aren't aware of this because a lot of people don't study value investing in business, and it talks about this in the free book. There's the ebook version, Seth Klarman's Margin of Safety, that mining is a very cyclical, very risky marginal business in general. Now, occasionally there's good mines, but miners in general have really, really hard problems earning back their maintenance capex, and on top of that, generating consistent free cash flow. So because mining is so cyclical, it's boom and bust. Cyclical means basically boom and bust. And so in a bear market cycle, part of the bear market, as we're having now for a lot of the gold miners, and yes, we've had a rally in the gold price. The gold price when we're recording this is at $12.91. The silver price is at $15.55. But this is not an environment where really any miners can go out and raise lots and lots of capital. So this was, I would say this is a defensive move for maybe Goldcorp. I think Goldcorp is getting a good deal here because Goldcorp in this market environment could not have gone out and raised the capital that they needed to. We've seen recently that First Majestic Silver had to do another emergency capital raise, so that was not ideal. So I think in general, the mining industry, if I had to summarize it really quickly, it's a mining in general is very, very, very bad businesses. Okay, the margins are not consistent. The commodity price can fluctuate. There's enormous amounts of maintenance capex, and there's so many things that can go wrong. If you have a really good mine in another country, you know, the government in the other country could change the tax rules and try to increase the taxes, or even worse than that, like what you had with the copper mine in Indonesia, Freeport-McMoRan, which is one of the world's largest copper miners. They have one of the world's largest copper mines in Indonesia, and I believe the Indonesian government just seized, I think, more than 50% of the mine. And I don't think Freeport-McMoRan got anything in return for it. So it is a very, very dangerous business. There is a lot that can go wrong. It is very cyclical, and from a value investing, understanding how a business works with operational standpoint and margins and free cash flow, the miners can go bust if the costs don't fall when the commodity prices fall. Okay, let me check my notes here. So I will attach some links to some of these articles from mining stock analysts that are free, talking about the Newmont Goldcorp deal. Comment in the comment section if you think the deal is good. I think it's a survival deal. I think it's a Hail Mary because basically, the miners, a lot of these producing miners are truly out of ways to dramatically cut costs without doing mergers and without figuring out ways to start firing upper management teams to drastically cut selling, general, and administrative expenses. Rick Roll and I have had many discussions on the Wall Street from Main Street YouTube channel over the years in the archive section over the last couple of years talking about this. We're discussing, well, why won't the miners do it? And Rick says, well, they don't want to take a salary cut. They don't want to fire their friends. He's saying this should have happened years ago. And finally, the miners have realized, and the comments came out from the Newmont mining CEO, that they don't want to go raise capital in this market, sell equity, and they're developing defensive strategies to drastically cut selling, general, and administrative expenses. And the other thing is, the miners cannot replace mined economic reserves. So it is very, very tough. There is not a lot of projects from a lot of junior miners that have economic projects at the current gold and silver price. So if the gold price goes to $1,400, $1,500, $1,600, there is a lot of gold projects that will be economic. If the silver price goes to like $25, $30 an ounce, there is a lot of projects that will be economic. However, in the environment we have now, there are a lot of the juniors, very few projects are economic at current prices. Even if the price went up like 15, 20%, a lot of junior projects that have advanced through the stages towards, economic and mining decisions are still not economic. So one of my loyal listeners emailed me. So this is not financial advice. Stupid disclaimer. I forgot to talk about the disclaimer earlier. So this is not financial advice. Everything here is just my opinion, giving you analysis on the gold and silver markets. One of my listeners emailed me and asked me about Great Panther Silver. So Great Panther Silver, and he was talking to me about Great Panther Silver. Basically, even Great Panther Silver is now transitioning to mining gold. So you have all these either large silver miners, primary silver miners, or mid-tier primary silver miners, and they're almost all transitioning to mining gold because the margins are better and They're diluting their shareholders if they have to survive, so the management team still has some equity and maybe somewhat of a salary. Some of them are taking pay cuts. But these are dire times, even more so for primary silver miners than they are for primary gold miners. So you've seen, and I've talked about this in many short videos and many live streams and many interviews over the last 3 to 5 years. You've seen many primary silver miners, whether it's Coeur d'Alene, Hecla. It used to be called Silver Standard. Now it's SSR Mining. SSR Mining now hardly has any silver production. That's crazy, right? They bought 2 producing gold mines, and their silver production that they have is not economic. The cash costs were between $12.50 and $15 an ounce. So, and down in Argentina, and they only have a small, I think it's some type of joint venture, but it's not really economic, but they didn't shut the mine down yet. And so you have Great Panther Silver, you have Fortuna, and they're not buying the gold mines that these primary silver miners are buying, guys, are not the highest quality gold mines. A lot of these guys, I looked at Fortuna Silver because someone in the comment section, loyal listener here, mentioned them, and they bought a very marginal gold. They bought a very marginal gold mine. They're bringing it online soon. If you look in their investors presentation, they're touting it, saying that this is the key to their growth. But I looked through the mine plan of the gold mine, primary gold mine that Fortuna Silver is bringing online, and it really only has good gold production for about 4 or 5 years, and then the production falls a lot. So in terms of, and normally for really good mines, that's not what happens, okay? For those of you who are not familiar with the mining business, if a mine, the production is only high for 4 or 5 years at certain grades, and then it falls off a cliff, the production falls off a cliff, and the grades fall off a cliff, it's not a good mine. And that's why the larger gold miners, the better ones, didn't want the project, okay? And I wanted to make a comment here about mergers and acquisitions in general. And if I was an investment banker working on Wall Street or for one of those highly paid white shoe firms or investment banking firms and I made this comment, I would be fired immediately. But if you go back, and I'm sure there's a lot of empirical evidence on this now, but the majority of mergers and acquisitions for publicly traded companies, over 50% of them are bad deals, okay? Very long-term bad deals for the shareholders. Sometimes they're even very bad deals in the short term. I'll give you some examples of this. So the former Microsoft CEO, Steve Ballmer, who now owns the LA Clippers, and I'm sure Microsoft shareholders are happy about that because he can go be a cheerleader on the court and run around like a drunk idiot. But anyway, though, he did so many bad acquisitions, this Steve Ballmer guy, when he took over from Bill Gates as CEO of Microsoft, that basically the stock price was permanently discounted. There was a Ballmer discount, and Ballmer was doing so many bad acquisitions that he would literally do a couple different ones per quarter for $1 billion or more, and sometimes the acquisitions would be written off to zero only a month or 2 later. And so there's a history, guys, of it. The reason a lot of these mergers and acquisition deals get done is there's enormous pressure from both investment bankers on Wall Street who get enormous bonuses to call up the CEO and CFO and upper management of a publicly traded company and get on the phone with them almost on a daily basis and say, you guys should buy out this company. We'll give you the debt. We'll give you the debt. Come on, we should do it. And so the people on Wall Street make insane bonuses from mergers and acquisitions. We've had artificially cheap debt in order to help them do that with financial repression, to help them do that. But the numbers say that most acquisitions from publicly traded companies, over 50% of them do not work out. Now, occasionally you get the case where Disney buys Marvel Entertainment. That's, one of the best acquisitions in a very, very long time. Disney bought Pixar, another amazing acquisition. Disney's done okay buying out for Lucasfilms and Star Wars, buying out the Star Wars franchise. They've had some flops there, but I think you could unequivocally say that Disney buying Pixar and Disney buying Marvel have been home runs. But for every winning acquisition like that gets put in a Harvard Business School case study textbook where future investment banksters are going to learn how to, basically learn business from one good example of mergers and acquisitions, there's hundreds, if not thousands, of bad deals. Hundreds and thousands of bad deals. Meanwhile, the shareholders in the long term get screwed. The management team that does the acquisition in the short term, if it boosts revenues and earnings, it means that the management team could get their stock options bonuses. But if the revenue growth and the earnings growth and the growth in free cash flow do not work out, the company and the shareholders are saddled with long-term debt from the bad acquisition. And I wanted to also bring up, since I love financial history, and I know some of you guys do too, in the 1980s, Peter Lynch, in his book, I think it was One Up on Wall Street, he writes about this, and he writes about this is when the junk bonds had just started, I think, with Michael Milken. And so there was crazy amounts of mergers and acquisitions and leveraged buyouts, and you had large corporations that maybe they specialized in one or two different industries that had some synergy or related to one another somewhat, but you had them going out because they could access the junk bond market and other stuff, and there was pressure from the investment banks and pressure to grow revenues no matter what and be diversified. Peter Lynch calls it diversification. I agree with him. And so these were these mega conglomerates, but you would have cases where a corporation like General Electric would go out and buy like a television company. They would go about and buy like 10 different companies in 10 different industries. Or you would have cases with like a tobacco company going out and buying a food company, an alcohol company, wine, beer, all these different things that didn't really make any sense to go together. All because, they had cash flow, they had assets, and they went out there and decided, and the investment bankers, I'm sure, were pressuring them to do this, that they had access to the debt and they could do a leveraged buyout like that. Yeah, so Barrick Gold is actually slashing their selling, general, and administrative expenses like crazy. This is what I was hoping would happen with the merger when they bought Randgold and the Randgold CEO took over. That was like the best case scenario. So we'll see if this continues. Long term, that would be good for the company. We'll see if that happens in this Newmont Mining and Goldcorp merger and acquisition. But basically, guys, these mergers and acquisitions with the mining companies, the producers, are being done because they do not want to sell royalties and streams. They're trying to delay that as much as possible. So if the gold and silver prices do not continue to rally and the producing miners need capital, the next step I think you'll see the 5 largest royalty and streaming companies start to come in and do even more royalties and streams. Now, Nolan Watson has said that basically he's worried about counterparty risk, and he thinks a lot of these miners, whether it's a primary copper miner or a primary gold or primary silver miner, need to go out and raise capital or equity first. They need to sell shares first before he would do a stream. But Sandstorm is more conservative right now. But I think you could see the larger royalty and streaming companies, the Franco-Nevadas, the Royal Golds, the Wheaton Precious Metals, and the Osiskos, be more aggressive in this environment and maybe do some larger royalty and streaming deals on producing mines without the miner actually raising equity first, because they'd probably get better terms, but that could be dangerous and could backfire. But in general, mining businesses are really, really bad businesses. There's so many things that can go wrong. The maintenance capex is super high. This is what most people don't understand, because they see that, the miner has reserves at this and the cost should be this, but then they don't see all the things that could go wrong at the mine. The mine doesn't come on time and on budget, or once the mine's up and running, there's a flood at the mine and the mine shuts down, and then there's no cash flow and then the miner's in trouble. So buyer beware with mining companies, okay? They're not really good investments, okay? The better investments are the largest royalty and streaming companies. There's 5 of them. I already mentioned them. Those are way safer. Now, you don't always get them at good valuations, but they're way safer, and you can at least sleep at night, as long as you don't have too much of your capital in the royalty and streaming companies. The mining companies, if at this point, if I had too much capital in mining companies, I wouldn't be able to sleep at night. I don't know if it's all upside from here. It depends if the gold and silver price stays flat for a while or goes lower. Because if the gold and silver price, if everything crashes and does go lower, then we could have a scenario where some of these miners that don't have access to capital and don't have enough cash on the balance sheet could go bankrupt. I'm not saying all the miners will, but some of them will. Okay, so I'll look at listener questions and answers later. We're at almost 25 minutes. I think I'm doing a decent pace so far. I think I've covered a lot of the stuff I wanted to cover. Okay, so want to move on to the next topic. So if you're a Real Vision TV subscriber, I've obviously promoted them. They're actually opening up their content. I believe 20% of their content now, and they're growing their content even more, will be free. So if you don't want to pay it all, you're a cheapskate, you can go to the Real Vision TV website, and 20% of their content will be free now. So that's good. But behind the paywall, as you guys know, over the summer I interviewed Victor Sperandio. Well, Victor Sperandio did a 71-minute interview for Real Vision TV that was released last Friday to be exact, and he said that during the interview there was a lot of great insights in there. He said he is playing defense, he is not heavily shorting anything yet, but he expects a lot more volatility, he expects a lot bear market rallies, but that smart money will sell the bear market rallies. And he also gave some very interesting things in there in his analysis, besides the hold to maturity accounts that we talked about on our interview, what the banks are doing, how basically the treasury market won't be a no bid because it's a type of like bailout. To make sure that there's no bid at the treasury market, the large U.S. banks have hold-to-maturity accounts to go in there and buy treasuries. And they already have, I think, hundreds of billions of dollars in treasuries stashed there in their hold-to-maturity accounts. And they don't have to write off any losses on their treasuries. They don't have to mark them to market. If they got the rules changed by the Federal Reserve, and they don't have to mark off losses of any treasuries they hold in their hold-to-maturity accounts. But anyways, Victor Sperandio said that, and I thought this was very interesting, he said the U.S. government has $10 trillion in additional off-balance sheet debt already. That's not counted in the $21 trillion. He also said that the U.S.'s budget deficit is really $6 trillion. Okay, so the additional $10 trillion that Victor Sperandio said the U.S. government has in additional off-balance sheet debt is not counted in the unfunded liabilities. The unfunded liabilities are obviously a lot more than that. Jeff Gunlock said they're $122 trillion recently. I think they're a lot more. If you believe Lawrence Kotlikoff, who's I think Boston University economics professor, he says the real unfunded liabilities amount is over $200 trillion. He's done a lot of interviews out there in the public, including Greg Hunter of USA Watchdog. There were also 2 good Macro Voices interviews in the last month. There was a new Christopher Cole one. He came on last year, and he gives us an update about the leverage short volatility trade and how basically because of the risk parity trade and all this leverage and everyone's trying to earn extra income on Wall Street, that the leverage short volatility trade at some point will blow up. So there's going to be probably dozens and dozens of long-term capital managements at some point because of how leveraged and how short volatility in many different markets managed money is. So I would encourage you, that's free. You can go to the macrovoices.com website, or you can go to their YouTube channel, which is linked in the featured section of the Wall Street for Main Street YouTube channel, and you can go check out that interview with Christopher Cole, the new one. Also, go and listen if you haven't listened to his interview last year, about a year ago, because he was basically predicting that what happened in February with the VIX would eventually happen. But he says that's just a small minor thing. He said that's not the big party. It's going to get a lot worse. And there was also an interesting interview from an over-the-counter derivatives expert. I think that was from December 20th on the Macro Voices website from their podcast. And that guy said, I learned a lot about the OTC derivatives market. And he said basically during 2008, there was a $24 trillion margin call for all the global investment banks. And that's why you had the rules changes. That's why you had the banks have mark-to-market suspended with the FASB laws in March of 2009, and that's also why you had the Federal Reserve start doling out massive currency swaps. The commercial paper market also froze. There was problems in the euro-dollar market, but the currency swaps for a margin call for the over-the-counter derivatives, he said the margin call was approximately $24 trillion. Massive margin call. That would wipe out all the banks. They'd be insolvent. And that's why the Federal Reserve had to step in such a short amount of time and do all those currency swaps. So I think over the next couple years, it may be a little bit more than that, but the passive investing or ETF bubble, the risk parity trade, which supposedly Ray Dalio is out of and Bridgewater may be out of now. I think I heard that from one of my friends. And the leverage short volatility trade may all blow up in just the next few years. And that would be, in my opinion, that would be like a bunch, dozens and dozens of long-term capital management scenarios. So you'd have the Wall Street investment banks, who are normally the clearinghouses for all these hedge fund trades. And these hedge funds are the ones doing all these crazy types of trades with leverage. So if the stock and bond markets both fall, that would blow up the risk parity trade, because even if Ray Dalio and Bridgewater are out of it, there's a lot of people that are still in it, trying to earn extra money that way. I'm just checking my notes. I'm gonna get a water in a second, then take a look at listener questions. A couple more topics I wanted to cover real quick, and then I'll just wrap up the show with listener questions and comments. So I did remember on the live stream show I talked about Trump's tweets about oil. Well, I didn't explain one of the points I wanted to make, and the point was basically Trump, you have it, and I don't think anyone's going to prosecute him for this, but basically he's admitting in his tweets that he helped manipulate the oil market by telling the Saudis to increase production. That's manipulation. So I don't think the CFTC or the Securities and Exchange Commission or anyone's going to go after him, but if you get one of your contacts, if you have that much pull in a market and you get someone to flood the market with supply, and then you put on your Twitter that you were the one who did that, then that's, textbook market manipulation. Okay, last thing here before, a couple more. So, most of the gold community guys, a lot of the gold community has been repeating pretty much the same stuff for the last 10, 12 years. So when the information changes, they don't change their opinion really at all. They just spin things to fit pretty much their narrative. So unfortunately, guys, I think most of the gold community is either lazy or dishonest. What do you think about that? Oh, I like Doc Holliday. I like Eric Sprott and Doug Casey. But Doug Casey says that gold's not manipulated, which I disagree with. I'm friends with Doug. I disagree with him on that. Last point here is on Alexandria Ocasio-Cortez and Beto O'Rourke. So they've been saying some really crazy stuff, like pro-socialism stuff, talking about, the Constitution's just a piece of paper. We don't need it anymore. It's outserved its purpose. How, the 70% tax plan, now supposedly there's a poll out. I didn't see where the poll is from, but I just saw the news story today. Well, now we're past today, but this afternoon that basically a lot of Americans are actually in favor of Alexandria Ocasio-Cortez's tax plan. They probably did the polling at the universities. They probably went and interviewed the people in the economics departments there or in the liberal arts degrees, or the sociology departments there. That's probably where they did the polling. So, inflation and taxes will be the new normal unless we have a temporary deflation with some free market forces and bankruptcy. But it seems the elites want inflation and taxes, and it seems that the elites want to bring European socialism here to the U.S. And I hope I'm wrong about this, but I think Alexandria Ocasio-Cortez and or Beto O'Rourke are both being groomed to be president sometime in the next 12 to, 16 years. Hello, Doc. Not only is she batshit crazy, she's a book smart woman. She is batshit crazy. She is a blind ideologue, but she's also evil. But the thing is, a lot of these socialists don't view themselves as evil. A lot of them don't even believe in God. A lot of them are atheist. A lot of them also believe in moral relativism. She's dating Alexandria Ocasio-Cortez. She's all about hardcore feminism. She's dating Cory Booker now, the New Jersey senator, and Cory Booker admitted he raped a girl, sexually assaulted a girl. Okay, so these champagne socialists, a lot of them are enormous hypocrites, okay? Why is she, if she's a hardcore feminist and she attacks men routinely on Twitter, why is she dating another hardcore Democrat politician who admitted he sexually assaulted a woman? It doesn't make any sense. Hello, Mainframe. That's funny you brought that up because you should go back and look at some of Chelsea Clinton's old tweets. She had a nice conversation with the Church of Satan, which had a blue check mark. This was like a year or two ago. I actually was in shock when I looked it up on her Twitter. It was out there in public. Okay, guys, well, I think I'm done with all the topics here for today, so I can take a look at listener questions and answers really quick. I've actually managed to keep this way below an hour, so everyone give me a quick applause. We are at oil prices. I'll just do a quick wrap of some prices. So we're WTI 52.03, Brent crude at 61.05. These are very rough prices. I'm hearing from my friends in Texas and Oklahoma, listeners to the podcast, that they are very worried about losing their jobs. So yes, we have cheap gasoline prices, but like I said, our friends who listen to this podcast who work in the oil patches in North Dakota, Texas, and Oklahoma, if this persists, they could lose their jobs. So I'm not wishing that on anyone. So we're not at a sustainable oil price for much longer. So enjoy the cheap gasoline prices if you're an American while you can, because I'm gonna, if this continues for 6 months or 12 months, we're gonna see a lot of bankruptcies. Okay, let me look at the VIX is down to 19. The dollar index is back up to 96.17. So the dollar index this wasn't, when it got to 95, it wasn't and it had corrected down from 97. This is a rally, so we'll see what happens. Like I said, there's been other people. I sputtered there for a couple minutes, but anyway, there was a bunch of people recently that have been saying that 97 is the absolute top for the rally in the dollar index, and I've been saying this for a while, that I'm not convinced. So again, I'm not convinced. I don't think there's any evidence that 97 is the top for the dollar index. And as we see more evidence of problems in the global economy, in China, in the European Union, in the United Kingdom, and in emerging markets, and also Japan, I don't see evidence why people would necessarily leave the dollar yet. Okay? So if I do, I will let you guys know. But as of right now, I do not see that yet. If my mind changes about that and I think the dollar rally is over, you guys will be the first ones to know. But as of right now, I do not see a change in the dollar rally yet. Okay, you have a bunch of symbols there. So Brexit, France burning, Germany, protests everywhere, and we have a government shutdown. What's going to happen when people can't pay their rent, can't get food stamps, USDA doesn't pay out farmers? I think we'll have a lot more crime. I think we're seeing a lot of increasing in crime on the local news here in the DC metro area already. And I forgot to mention this, we're at day 26 of the government shutdown, almost day 27. I was planning on making some type of funny joke or comment about that before the show started, but I figured I would just talk about how LibertyCon is coming up, and if you guys want to meet me there, and then doing like a global macro summary first. I don't believe any of this is coincidence. Well, I think Trump is using it for leverage for the government shutdown, but the Democrats don't want to give Trump any type of win. A lot of these Democrats are hypocrites. You have one of the senators, I think it's the guy from Connecticut, and he's saying that if the U.S. does, if Trump does reopen the government, that he will actually negotiate. He's in favor of border security and maybe some type of additional funding, but I don't believe him. But the Democrats, some of these Democrat senators and Democrat congressmen have been doing the rounds even on Fox News and putting things like that out there. I'm not sure I believe them, though. I'm not sure I believe them about anything they say. Not that I trust Republicans much more either. Both parties are awful, and the Libertarian Party is corrupt as... The Libertarian Party in the United States has absolutely no power. And why is it corrupt? Oh, it's a disaster. We really need a better third party in this country. The Libertarian Party is a disaster. And anytime that I'm talking with friends who aren't libertarian about the Libertarian Party, they bring up the fat idiot who takes off his t-shirt and runs around, the stage, the super fat guy who's running around almost in the G-string. So, I mean, it's bad, really bad optics and really, really embarrassing. And then you have Bill Weld, who wasn't even a libertarian, was running with Gary Johnson, and we need better candidates. We need to eliminate the corruption. It's a disaster. And then they don't even like the Austrian school. So there's a lot of the Libertarian Party hates Austrian school economics and Ludwig von Mises and stuff. I think one of the heads of the Libertarian Party got in some huge fight with Tom Woods. And Tom Woods didn't even talk to the guy, and the guy just picked on Tom Woods because his podcast was popular. It's just ridiculous. Save the drama for your mama. Stop that stuff. I'm tired of this type of drama. We're never going to get anywhere. Anyway, as a libertarian, all I really do now at this point is I just point out corruption in both political parties. I think that's the best thing we could do, and get people to ask questions like, oh, well, why is Senator Joe Lieberman, after talking really bad, telling how corrupt what the Chinese telecom company ZTE is, why did he all of a sudden agree to get paid big bucks to be their lobbyist? I mean, I could go on and on. There's books about all the corruption and the revolving door and the lobbying and all this stuff. The latest example, like I said, is just Senator Joe Lieberman, who's considered normally a moderate Democrat, and the radical Democrats now don't even like him. They say he's old and he's too moderate, and they want to kick him the fuck out of the party. And so now he's going to be a lobbyist for a Chinese telecom company that he's been warning people about and saying how bad and corrupt it is. It's the same thing like Bart Chilton, the CFTC commissioners, going out doing all these interviews talking about silver manipulation, talking about how manipulative high frequency trading is. And now I'm not sure if he's still working there, but he was a lobbyist in favor of high frequency trading. This is only stuff that you would understand if you lived here in the DC bubble long enough. That's how crazy things are here in the DC metro area bubble. Okay, I'll stop my rant. The timing, symbol guy, you don't have a name up there, so I'm going to call you symbol guy. The timing is impeccable for the level of synchronization I'm seeing throughout the world. Yeah, it's almost as if they want everything to crash and then blame Trump and then start going even further, increasing on more surveillance state, more totalitarian government, more socialism. Less freedom, maybe social credit score in Europe, social credit score in the US. I mean, there's already no free speech here in the US in a lot of aspects. If you speak out and someone doesn't like your opinion, they could get you fired from your job pretty quickly now, if enough people protest. Gypsy Tree, thoughts on Sandspring Resources. I know nothing about them. I don't follow juniors. So, in general, I don't like most juniors. I think they're pretty bad. They're very, very speculative. And so that's a point I wanted to make about a lot of these other mid-tier mining stocks. They're not really investments, what I would call investments. They're more speculative. So a company like Fortuna Silver, or a company like, well, the guy who emailed me, Great Panther Silver, I would say they're more speculative. So you can make some money if you time the cycle right. Again, not financial advice, just my opinion. You can make a good amount of money if you time the cycle right, but if you time the cycle wrong and you buy a company with a bad balance sheet and the commodity price goes down, you're going to be in trouble, because the company is going to have to dilute to survive, or sell out their assets for pennies on the dollar, or go bankrupt. So I'm avoiding juniors. My favorite way to play juniors right now is not actually junior. They have royalties from juniors, and that is Sandstorm Gold. Thoughts on First Majestic Silver. They've made some big mistakes, and I don't like what they're doing with their marketing. I cannot go into it in any more detail because, to be honest, I do not want to be sued. There's a lot of things I could say about a lot of people in the gold community, naming names and all the crazy stuff that's gone on behind the scenes with bad deals and how badly I've been treated, but I honestly don't want to be sued, so I will not say anything else. I think First Majestic Silver has two good mines. Okay, they have the San Dimas mine and they have the Santa Elena mine, and their business model for First Majestic Silver has been doing a lot of acquisitions to grow. And if you go back and look through their financials, Dino, what you will see is that a lot of their mines, I think they have 6 mines producing, four out of the 6 are bad. And in fact, I think they just put one on care and maintenance because it's losing so much money. And I think they're gonna, the other mines are like written off. So they have 2 good mines, and they have gold streams on both mines, which is not ideal, especially in this environment. But they really need to figure something out. Maybe they need to spin off those bad assets, or they need to sell those other silver mines that are not good for them, raise cash, sell it to a mid-tier silver miner or mid-tier gold miner or something like that. But they've had a lot of problems lowering their costs, and so they're no longer a lower cost producer right now, and they've had problems keeping things on time and on budget with the investments they've made into lowering their costs. So unless they can lower their costs in the near future, they're going to have to do another capital raise. And they just announced one. So I would monitor that. If you're going long that stock, I would hedge it with puts, man. Not financial advice, but I would hedge it with puts because it could go a lot lower. There are clear operational problems at that company. And other stuff I don't want to go into in public. Symbol guy, Goldcorp would have done better without the buyout. Was expecting good earnings for the fourth quarter. Shareholders got robbed. Maybe, but if they didn't execute, they've had bad quarters in a row for a while now. So if you thought they would have actually turned things around, then you would have been right. But if they didn't turn things around, this is not an environment where if you screw things up and your costs are bad or you have not enough cash on the balance sheet and you need to go raise a lot of capital, this is not a good environment to do so. And right now, like I said earlier in this live stream show, most of the miners, producing miners, are avoiding going and selling large gold streams or silver streams on their mines. Now, a lot of primary copper and base metal miners want to sell gold streams or silver streams, but their balance sheets are bad and their costs are bad. So I think unless we have a big rally, maybe it's China's already done so many stimulus plans, though, and China's a mess, that I'm truly worried for a lot of these primary copper miners. We may, over the next 2 to 3 years, have a really, really big bust in some of these primary copper miners. My opinion on First Majestic Silver has changed, though. So maybe they add another mine, but they really, that has better margins. But right now, they really only have two good mines with good margins, and their other mines are giving them problems, and they probably should sell them for cash. Unless the silver price rallies, and then that'll bail them out. If the silver price goes up a lot higher, those mines that are not making them any money will reverse and be profitable. But I think there's an immense amount of risk in First Majestic Silver. I personally like, and this is not financial advice, just my opinion, I personally like Pan American Silver better. I think it's way safer. And I think Pan American Silver has way better low-cost primary silver production and way better reserves, and they have way better growth of silver. And if the rumors are true, and the buyout rumors going around, that they buy Mag Silver, the JV interest in Juanicipio, then Pan American Silver would have basically control out of 3 out of the 5 largest primary silver mines that are lowest cost and longest life on the planet. So they would have like La Navidad, Escobal, and Juanicipio in Mexico. La Navidad's in Argentina. That mine should have been online. It'll probably be online in a couple years. Very, very long life mine, super high grade. And then they have the Escobal mine they just got from Tahoe in Guatemala. And then they would have the Juanicipio, access to the Juanicipio mine in Mexico. The Mag Silver mine, in terms of silver grades, the newest silver mines, Alexco, which is speculative. Alexco used to be like a $11 to $15 share stock, and then the stock crashed enormously below $1 over like the bear market in silver the last 6 or 7 years. In 2011, I think Alexco was like $15 a share, and they have like over 400 grams per ton silver. It's up in the Yukon, but they have infrastructure and power there, so it's kind of in the middle of nowhere, but they already have a lot of the infrastructure and power there. But it wasn't a low-cost mine, and they worked hard on lowering the cost at the mine, and they were planning, I think, on starting mining again by the end of this year. So the balance sheet is not a mess yet. I don't think they took on debt. but it's very, very speculative. But if the silver price does turn around, you're looking at very high-grade silver and an increase in silver production. So I think Alexico risk-reward, it is very speculative. Again, not an investment, more of a speculation, but it has a lot of upside if the silver price rallies. And the other high-grade one is Mag Silver. Mag Silver has $10 an ounce silver all in for, like, if you believe they're geologists, that mine will run for 100 years and have over 1 billion ounces of silver reserves. Oh, the Indonesian government gave them $4 billion? Well, they have to go and buy something else because Wall Street's not going to like them holding the cash necessarily. I personally thought that Freeport should buy more producing gold mines because they have a lot of gold production, but it's a byproduct. They actually haven't sold any gold streams yet. So they've been one of the few companies that has avoided selling gold streams on their assets. Yes, and Andy Hoffman also bashed them too. So, and Andy, oh God. Let's not talk about Andy Hoffman. He's a very smart guy, but he claims he's right all the time. And then, like, what he did was highly unethical. How he was doing all those interviews on SGT Report talking about silver, and then he had already sold all of his silver. So Andy is a very smart guy, but the stuff he did in public on the SGT Report, all those interviews for over a year, and then finally admitting he had sold all of his silver was extremely unethical. Okay, I'm scrolling through more of the comments. There's a bunch of them. We're going to try to keep the show under an hour. So we have like about 8 more minutes if we're going to do that. It's Mission Impossible time. You guys are talking a lot about the miners that you own. I would much rather own, and this is not investment advice, just my opinion. I would much rather own like Wheaton Precious Metals and Osisko Gold Royalty and Sandstorm Gold. Buy about like shares of all 5 of those precious metal royalty and streaming companies and just hold those. And they're diversified. They have cash flow. They have good margins. A lot safer. So you're not going to get as much upside, but you can sleep at night. If the thing most people don't realize about a lot of these mining companies, especially the mid-tier miners, a lot of them have to bet the whole company, or a junior miner that's bringing online one project, they have to bet the whole company on one mine. So if it's a mid-tier miner and they have 2 or 3 mines, they have to do an enormous amount of capital raising with equity and debt, or use a lot of the cash in their balance sheet to bring on the mine. And then if that goes wrong, they're in trouble. Look what's happened to Primero Mining and New Gold and I could go on and on. Allied Nevada, I could go on and on down the list. So if you know what you're doing, you can do okay in that area. But if you don't know what you're doing, the mistakes, the losses are going to be large, and they're going to be very, very painful. With speculating on like mid-tier producers that are growing production, the mining companies. I've made profits there. I've also lost money. No one's perfect. Even one of the best value investors on the planet, Seth Klarman? I think he had 10% of the Pacific Gas and Electric, the utility stock, and they just declared bankruptcy. So even the best investors on the planet make mistakes. I think it was Seth Klarman, or it could have been one of the other, could have been Dan Loeb. I think it was Seth Klarman. But, these guys are brilliant value investors, but, they have too many investments. They don't pay full attention. Once the wildfires started in California, that company, that utility was in big, big trouble. You'd think that more people would have gotten out of that stock, the utility that had a bad balance sheet, once the wildfires happened. They were liable for a lot. I had heard rumors pretty much within a couple days or a week or two of those wildfires in California starting that the utility company was in trouble and was going to declare bankruptcy, in a couple months. I'd heard those rumors. I don't know if you guys did, but I heard them. Hello, Dino. I think the royalty and streaming companies will outperform on a risk-adjusted basis. All of those. The thing is, the royalty and streaming companies, the largest ones, are rarely cheap. So like Franco-Nevada is rarely super cheap. Same thing with Royal Gold. About 2 or 3 years ago, I think Royal Gold was around $35 a share, and I think it almost It went up 2.5, 3 times at one point. So it went from like, it dropped down to like 35 because there was a bad deal or two, but most of their portfolio was in good shape. And then the stock went up to like 80. And the most regular value investors won't even touch royalty and streaming companies too. And most value investors, like money managers, professional ones on Wall Street, won't buy any mining stocks. Mainframe 386. IMF just authorized Canada, Russia, and a few other countries to issue new cryptocurrencies. Well, this is part of the plan for cashless society, to track and tax every transaction. We have people now in many countries who are voluntarily willing to wear chips. Okay, wasn't that mentioned in the documentary Aaron Russo from Freedom to Fascism that Aaron Russo came out with? Talking about how the goal from David Rockefeller, because he used to be friends with him, was to chip everyone. And now you have people who are pro-technology and brainwashed who are willing to wear chips on their own. You don't even have to brainwash them or put a gun to their head. They want to be chipped. Not everyone, but I mean, it's a growing number of people who want to be chipped now. Chipped. Okay, guys. Well, I'm getting tons of mining stock questions here, so it's just too much. It's getting too late. We're almost at, well, 30 minutes away from 1 a.m. Eastern time. I want to take a break. So I'll speak to you all later, and everyone have a nice rest of your week. And if you're going to be in town for LibertyCon, either send me a tweet or send me an email. Or if you just heard about the conference right now and you think you can make it, let me know. Okay, bye, everyone.